The FTX disaster is deeper than you think. If you think the recent FTX crypto exchange disaster is just a case of an isolated incident, you're badly mistaken. This event is just the latest in a long string of tragedies that have befallen the crypto world, and it highlights some very real dangers that exist within the industry. Welcome to the Peak Performance Channel, the place where you come to be inspired to create a more prosperous future. Sam Bankman-Fried, or SBF, is the CEO of FTX, a cryptocurrency derivatives exchange. He is also the founder of Alameda Research, one of the largest cryptocurrency quant trading firms in the world. FTX was launched in 2019 and quickly became one of the most popular cryptocurrency exchanges. However, it has also been embroiled in controversy, with many accusing it of being a Ponzi scheme. In this episode, we take a deep dive into FTX and its controversial CEO. We examine the evidence for and against FTX and try to determine whether it is a legitimate exchange or a fraud. In the past year, SBF has become one of the most influential people in the cryptocurrency industry. He is a member of the board of directors of the Bitcoin Foundation and an advisor to several major cryptocurrency projects. In addition, he is a prolific investor and trader with a personal fortune estimated to be in excess of $1 billion. SBF has been involved in the cryptocurrency industry since 2012. He first started trading Bitcoin on Mt. Gox, and then he became interested in derivatives trading. In November of 2018, 26-year-old Sam Bankman-Fried, we'll refer to him as SBF from here, launched Alameda Research. Alameda is a quantitative hedge fund promising its investors high returns with no risk. Literally, Sam promised investors that there are literally zero downsides. In a few months, SBF decides to launch a crypto exchange named FTX. In August 2019, he raised $8 million from venture funds like Proof of Capital and Consensus Lab. Therefore, FTX started growing rapidly. In December of 2019, the world's largest crypto exchange, Finance, became an early investor in FTX. In the years following, FTX's growth went parabolic. It grew exponentially and became the second largest exchange after Binance. FTX then started cutting deals left and right, and their marketing spending went into overdrive. We're talking about Tom Brady, Steph Curry, and the Golden State Warriors Stadium, all with naming deals with Major League Baseball and esports giants. They even began sponsoring cryptocurrency and tech influencers, as well as finance YouTubers. Last year, they even ran an infamous commercial featuring Larry David during the Super Bowl. SBF is rebranding himself as a humble and frugal billionaire, one who drives a Toyota Corolla. He's becoming a man of the people and begins championing effective altruism. You know he's just this billionaire who wants to make the world a better place. The amount of good that you can do for the future of the world is really large, and it's way more than you can do to actually make yourself happy with anything like that amount of money. SBF. On the other hand, what started as a friendship between Changpeng Zhao, or CZ, CEO of Finance, and SBF, CEO of FTX, becomes a competition. Binance had decided to sell its stake in FTX, and as part of the buyout, Binance will take $2 million worth of FTT. FTT is a token created by FTX that is used for trading fees. FTX offers a variety of derivative products, including futures contracts, options contracts, and margin lending products. The platform also offers an over-the-counter OTC desk for institutional traders. In 2019, FTX launched its own token, FTT, which can be used to trade on the platform or to pay fees. This is an important part of the story, and I'll tell you why soon. But to get back to the point, during FTX's period of explosive growth, SBF was also making a push into politics. His parents are both professors at Stanford Law School with strong ties to the Democratic Party in the United States, and SBF became the second largest donor to Joe Biden. FTX is now a monster in the industry, Venture firms like Paradigm and Sequoia are returning back to invest because of the great potential. FTX's valuation has reached $32 billion this year alone. SBF has considerable political power, which he uses to begin establishing a regulatory mode for FTX. He also begins to develop strong relationships with influential people in Washington. On November 6, 2022, CZ makes a public statement insinuating that SBF has been talking to regulators about Binance and lobbying for regulations that would hurt Binance. So, CZ announces that he is going to sell the entirety of Binance's FTT stash. This would obviously cause a decrease in the price of FTT, so it caused mass panic in the markets. The price of FTT dropped by over 20% overnight. Alameda Research, the hedge fund started by Sam before FTX, is in hot water. Well, some news leaks by CoinDesk and others indicate that they have around $12 billion in assets and $7 billion in liabilities. But here's the thing, half of those assets are an FTT token that they created out of nothing. Now said token is free-falling fast. Alameda is in big trouble, and if Alameda is in trouble, FTX will be too. Caroline Ellison is the CEO of Alameda, and we'll learn more about her shortly because this story gets crazy. Caroline tweets that, "No problem, you know Alameda will happily buy all of Binance's FT tokens at $22. Then SBF tweets that, "Everything is fine." But 24 hours go by, and there's no indication from FTX about whether or not they have the financial strength to endure this storm, so people freak out. People are withdrawing their funds from FTX at an alarming rate, and rumors of insolvency are spreading quickly. Over $1 billion worth of withdrawals have been made, and FTX is now facing a serious liquidity crunch. FTX had to pause withdrawals shortly after that, and the panic reached a fever pitch. It honestly looked like the end of FTX. But CZ then tweeted on November 8th that Binance has entered into a strategic agreement to buy FTX. Binance will now own FTX and all of his assets. Everything's cool, but not so fast. Hey, here's a quick reminder before we continue. Make sure you smash that like button and hit the subscribe and notification button if you haven't already done so, as it means that YouTube sends you more of these kinds of videos and it helps our channel. Now, let's get back to the video. 24 hours after taking one look at FTX's balance sheet, Binance says no way and cancels the deal immediately. So on November 11th, FTX declares Chapter 11 bankruptcy. SBF resigns as CEO, and the new CEO brought in is John Ray III. Some may not know this, but he's the same guy that was brought in to clean up Enron's liquidation in 2001. Ray said that he has never seen such a complete failure of corporate controls in his career, and this is an unprecedented situation. Now everything starts coming out right. So, it seems that SBF lived in a penthouse with 9 other people who all ran the company together and were all in relationships with each other. SBF and Caroline Ellison were dating on and off. And by the way, Caroline Ellison's father, who's a professor at MIT, has a close friendship with Gary Gensler, who is the SEC chief. FTX lacked an accounting department. FTX had flawed internal systems, faulty regulatory monitoring, and untrained and unskilled employees in control of the company's finances, according to Ray's bankruptcy filing. This includes the corporation's lack of an accountant in control of its finances, which is astonishing for a company that was previously valued at $32 billion. It has been confirmed that SBF built a backdoor into FTX's proprietary accounting software. This allowed him to move over $10 billion worth of user funds into Alameda without alerting anybody. FTX may have used corporate cash to purchase residences. In the Bahamas, I understand that corporate funds of the FTX group were used to purchase homes and other personal items for employees and advisors, Ray said in the bankruptcy filing. Worse, there does not appear to be proper documentation for some of these transactions, and certain real estate holdings were listed in the personal names of FTX employees and advisors on Bahamas records, despite the fact that they were acquired using FTX funds. The long and short of it is that FTX took users' money, gambled it all away, and then used company funds to purchase real estate. SBF himself reportedly took billions of dollars out of the company coffers for personal use. It's an absolute mess. It's the crime of the century, and it's possibly filled with political conspiracies. The FTX disaster is a financial disaster of unprecedented proportions for the cryptocurrency world. Despite its quick rise to fame, it has quickly revealed itself as a black hole of bad investments and reckless speculation. It is simply the latest reminder that the crypto world is still a very dangerous place. Thank you for being all ears throughout the entire video. To create is effort, to copy is genius, said Albert Einstein. If you want to expand your income by building an online income, feel free to contact me so we'll get things moving right away. Remember, if you want to change your life, let's make a change together. You need to make a change.